What's up, everybody? Nate here, and we just got some great news about the health of our economy in 2022. Now, there has been a lot of worrying about if our economy is in a recession, and it's pretty easy to see why. GDP for Q2 2022 actually shrank, and this was the second consecutive quarter, meaning we are in a technical recession. Not only that, but inflation for July 2022 hit an over 40-year high of 9.1%, and markets like the stock market and housing market have drastically cooled off. So a lot of experts and investors have been worried about a recession, but one factor that is keeping us from a recession right now is the jobs market. But today, the most recent jobs report came out, and it shows that unemployment is actually shrinking in the United States, and businesses added to their payrolls in July 2022. So today, I want to kind of break down all of the numbers and show you exactly what this means for our economy. All right, so there's just a few key takeaways that you need to know from this report. The first and foremost is unemployment. Unemployment in the United States has pretty much been at 3.6% for the last few months, but it actually dropped down to 3.5% in the month of July. This means that businesses, even though the Federal Reserve is raising interest rates and it's a lot harder for businesses to grow right now because of things like inflation, they are not outright firing people. That is a great sign for our economy right now. Wages grew by 0.5%, so businesses are able to continue to pay people a whole lot more, and that is great when we have inflation hitting over 40-year highs. People are able to go out and buy a little bit more than they were in June, and that is a good thing for our economy. And overall, payrolls increased by 528,000, so that is a great thing. It means that businesses are still hiring people, and we're getting very close to where we were just before the pandemic. In fact, unemployment was right where it was pre-pandemic, right at 3.5%. Breaking that down even more, 96,000 jobs were added in the leisure and hospitality industry, and 89,000 came in professional and business services, then followed by healthcare, and then we also have construction adding 32,000 jobs. Overall, this is a great sign for our economy. I kind of mentioned it before, but over the last few months, the Federal Reserve has been raising its interest rates. Now, the reason it's been doing that is to fight inflation. It needs to kind of eliminate a lot of demand in our economy because in 2020 and in 2021, we had way too much. Businesses were hiring a lot, and people had a lot of money to go out and spend. This was not a big deal in 2021 because there was a lot of money in our economy, and like I said, interest rates were low. They wanted people to go out and buy a lot of things to stimulate our economy and keep us out of a recession because nobody really knew what was going to happen because of the pandemic. But when you have way too much of everything, well, now everything is overinflated and prices have to go up. People can buy a whole lot more because they have a lot more money, and businesses have a lot more costs associated with that. Businesses have to make a profit, and that has been one of the reasons why we have actually seen payrolls start to decrease in 2022. Jobless claims in July 2022 actually grew to 260,000, the most that we've seen since November of 2021. The number of unemployed Americans in the United States is around 1.42 million, and around 78% of Americans believe that they might lose their job within the next year or so. Now, the reason a lot of Americans believe that they might lose their job is because of a looming recession, but if we have lots of job growth, then we can't technically be in a recession. The Federal Reserve has talked a lot about this before, but the theory is if Americans are employed, then they're going to be able to go out and buy things, and if they continue to buy things, then businesses will get money, and there will still be money circulating throughout our economy, and that is a really good thing. In addition, as people buy more things, then businesses can slowly start to raise their wages, beating out to whatever inflation is at that time. But the job market could essentially flip in 2022. Like I said, you're still seeing a lot of layoffs and still a lot of unemployed Americans. The number of job postings for July 2022 actually started to shrink. Businesses are still hiring people at a decent rate, but they're not looking to hire as many people as they were before, and that is because of the Federal Reserve and inflation. The Federal Reserve is starting to raise its interest rates. The federal funds rate currently sits at around 2.25 to 2.5% in the United States, meaning it's a lot harder for banks and financial institutions and investors and Americans to borrow money. Businesses can't get the debt that they need to grow, so they're not going to be able to go out and hire as many people. They want to remain profitable at the end of the day because profits are what makes their business grow, so they can't hire a bunch of people just to lay them off down the road. But this is pretty much unavoidable in 2022, and it's because of what happened in 2021. Like I said before, there was just so much money in our economy in 2021, and businesses businesses were spending it. We also had supply chain issues and inflation, and one of the reasons that we had high inflation was because there just wasn't enough supply of things. So businesses wanted to hire a bunch of people and they had the money to do it. The stock market and other markets were exploding, meaning there was so much extra investor liquidity on the market, so businesses could continue to grow and they could continue to grow that supply because there was just so much money. Not only that, but we had some stimulus, extended unemployment benefits, and mandatory payments for mortgages and student loans were also paused. So Americans had money and they were going out and spending it, leading to more sales for businesses and record profits. That allowed them to hire people and be really competitive in the job market because now they can hire people for whatever salary they want. That is becoming a bit of a problem in 2022, and to kind of eliminate the supply chain issues, businesses overhired people. They were hiring as many people as they possibly could to try to build and create as many products as possible. Here's the thing though, they were trying to match demand for what it was in 2021, but demand in 2022 has drastically changed. Inflation is going up. Wages are starting to rise a little bit, but definitely not high enough, so people are not going out and buying as much as they used to. And businesses don't want to overproduce things because then you run into a problem like Walmart and Target are facing. They have way too many products on the shelves right now, so they have to liquidate it. They have to lower their prices so people can actually buy those things. And they want to start getting rid of stuff because all those products are already paid for, so now they have to sell them so they can actually make a profit. So businesses are starting to realize that they just do not need this many people in 2022. That's why you are starting to see some layoffs in the jobs market and some slight unemployment as well. Businesses are figuring out that demand is not equal to the amount of workers that they have, so they are starting to cut people because if they keep those people on, continue to pay them overinflated wages and salaries in 2022, well, they are going to go under. Interest rates are going up. They can't get any money from debt or investors right now, and people are not buying as much, so they can't simply continue to pay every single one of their workers. They're going to lay them off. Now, what we're starting to see in 2022 is layoffs, primarily in your small tech giant sectors. A lot of these companies that are brand new IPOs or are small tech companies, well, they just don't make enough profit in order to pay all of their employees, and they are going to be the first ones that have to lay people off. Your bigger companies like Amazon and Google are starting to slowly lay people off, but that is not going to be as drastic as a lot of experts and investors may think it's going to be. Now, the future of the jobs market is going to be determined by what happens with our economy. So if investors and businesses and people just don't spend as much money in 2022, you're going to continue to see those layoffs. These businesses want to continue to make a profit, and that's not going to come from sales right now, so they have to start limiting their expenses. And for a lot of companies, the first thing to go is people. They're able to cut their expenses and costs, and they're not really going to make a lot more sales, but it looks like a profit because they have a much smaller headcount on their payroll. But what we need to continue to look at is inflation and the Federal Reserve. The Federal Reserve has a neutral funds rate right now, so their interest rates are not hurting the economy, but they're not really growing it either. If they continue to raise their interest rates very aggressively, then we could see even more firings and more layoffs from businesses. Because at the end of the day, these businesses want to make profits, and there's only two ways to do that. Cut your costs, which means firing a lot of people, or you can make a lot more income, and they're not really going to be able to make a lot more sales right now because the Fed is raising its interest rates. People aren't going to be able to go out and get a mortgage. Credit card companies are not going to get as much money because all of that debt is getting a lot more expensive, so people aren't going to spend on it as much as they were over the last 2 years, and wages aren't going up either, so people are not going to be buying as many things in 2022, and that puts a lot of pressure on businesses, so they have to figure out a way to make profits, and this is the easiest way for them to do that. You can expect the Federal Reserve to continue to be aggressive in 2022 because they see that unemployment is so low, and they continue to see that businesses are not firing people in mass just yet. Once that starts happening, the Fed will probably have to lay off on its interest rates, but until then, it's going to continue to spike them up. It wants to bring inflation down, but it doesn't want people to be unemployed. However, this whole system may cause people to be unemployed because now you have the Federal Reserve raising rates and businesses having to cut people because there's just no money circulating throughout our economy. That could cause us to go into a deep recession, and at that point, the Federal Reserve will have to backtrack and completely U-turn all of its policies, stimulating the economy again, lowering its interest rates, printing a whole lot of money, and at that point, everything will start to grow. Businesses will want to hire more people again, people will be employed, and everything can kind of go back to normal. But that also means that inflation is going to go back up because you're printing more money and there's more demand and everything is being bought. So they have to be very careful about their monetary policy because they don't want to cause a recession, they don't want to cause mass firings, but they also don't want inflation to continue to get out of control because that means people can't buy anything anyway. So right now, this is a really good sign that we might not be in a recession in 2022, and it means that a lot of worrying can be put on the sidelines for now. But now I want to hear from you on this issue. What do you think about this most recent jobs report? Do you think we're going to see a lot more firings and layoffs in 2022? Or do you think the jobs market will continue to stay strong throughout the rest of this year? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.